UK inflation continues to fall, providing greater confidence that the Bank of England's interest rate hiking cycle is done. Headline CPI rose 3.4% in the 12 months to the end of February, which is slower than the 4% which was reported last month. And it's actually 0.1% lower than the Bank of England themselves were projecting. Core CPI, which removes energy, food, alcohol and tobacco prices, also fell. It fell to 4.5% from 5.1%. However, the contribution from services, as we've been discussing on Morning Markets, continues to be stubbornly high. It came in at 6.1%, although that has moderated from 6.5%. This is generally encouraging the Bank of England to maintain interest rates at their current level for a little while longer until, as they say, they see more credible evidence of inflation falling sustainably to the 2% target. An important dynamic which we'll be observing within this is the contribution from wages. As an investment team, we anticipate the contribution from wage growth and the base effects, as we saw public sector pay awards last year, will start to moderate from the calculation, which will encourage inflation down towards the 2% target. Within this, we're not expecting to see a change in interest rates when the Bank of England meet on Thursday. However, what we will be closely observing is the language which is used around inflation, growth and market policy dynamics. The market currently anticipates the first 0.25% interest rate cut to come in August of this year, and then potentially 1 or 2 more to follow before the end of the year. So between 2 and 3 interest rate cuts in total. This has moved quite materially. At the beginning of the year, the market was expecting between 1 and 1.25% worth of interest rate cuts to come through. Today will also be of great importance as we have an update from the Federal Reserve in the United States. We'll receive an update in terms of their interest rate decisions. At this stage, is not an expectation we'll see a change in interest rates, but we will be closely observing the economic projections which they revise. They'll also provide a revision of the dot plots, which is a graphical demonstration of each of the members of the Federal Reserve and where they expect interest rates to be at different points into the future. At this point in time, the dot plots suggest that there's 3 interest rate cuts expected by the Federal Reserve for 2024. However, it would only take 2 voting members to adjust their view to move the median. Given the growth and the inflation dynamics which we're seeing, we see a potential risk that we move from 3 interest rate cuts for this year to 2. However, we'll provide the full detail once the information is released tomorrow here on Morning Markets. Thank you very much for watching.